Traders use candlestick patterns to understand market sentiment. Rising and falling windows are two such patterns. They give clues about whether a trend will continue or reverse. These patterns are visual gaps in the price chart. They show us where the price has jumped up or down, leaving an empty space or window. A rising window suggests buyers are in control. They are pushing the price higher and are optimistic about the future. A falling window suggests sellers are in control. They are pushing the price lower and are pessimistic about the future. These patterns are helpful, but they are even more powerful when combined with other technical indicators. Traders should always consider the overall market context. They should also use other tools to confirm their trading decisions. Understanding rising and falling windows can give traders an edge. This essay will explain these patterns in detail. It will also discuss what happens when these patterns fail and what traders should look out for. A rising window is a bullish continuation pattern. It appears during an uptrend and signals that the uptrend is likely to continue. It is formed when the low of one candlestick is higher than the high of the previous candlestick. This creates a gap, or window, in the price chart. The rising window shows strong buying pressure. Buyers are so eager to buy that they are willing to pay a higher price than the previous period. This pattern suggests that the uptrend is strong and that prices are likely to continue to rise. Traders often use rising windows to enter long positions. They believe the uptrend will continue. They may also use this pattern to add to existing long positions. However, it is important to remember that no trading pattern is foolproof. Traders should always use other indicators to confirm their trading decisions. A falling window is a bearish continuation pattern. It appears during a downtrend. This pattern signals that the downtrend is likely to continue. It is formed when the high of one candlestick is lower than the low of the previous candlestick. Like the rising window, this also creates a gap, or window, in the price chart. A falling window shows strong selling pressure. Sellers are so eager to sell that they are willing to accept a lower price than the previous period. This pattern suggests that the downtrend is strong. It also suggests that prices are likely to continue to fall. Traders often use falling windows to enter short positions. They are betting that the downtrend will continue. They may also use this pattern to add to existing short positions. However, it is important to remember that no trading pattern is foolproof. Traders should always use other indicators to confirm their trading decisions. While rising and falling windows can be powerful trading signals, they are not always reliable. Sometimes these patterns can be derailed. This means that the expected price move does not occur, and the pattern fails. A rising window is derailed when the price falls back down through the window. This indicates that the buying pressure that created the window has weakened. A falling window is derailed when the price rallies back up through the window. This indicates that the selling pressure that created the window has weakened. Derailed windows are a warning sign for traders. They suggest that the original trend may be weakening. Traders should exercise caution when they see a derailed window. They may want to consider exiting their trades or tightening their stop-loss orders. Section 5. Example of a derailed rising window. Let's say the price of stock ABC is in an uptrend. A rising window forms on the chart. This signals that the uptrend is likely to continue. Traders enter long positions, expecting the price to rise further. However, the price unexpectedly reverses and falls back down through the window. This indicates that the buying pressure that created the rising window has weakened. The uptrend may be coming to an end. Traders who bought into the rising window are now losing money. They may need to exit their positions to limit their losses. Section 6. Example of a derailed falling window. Let's say the price of stock XYZ is in a downtrend. A falling window forms on the chart. This signals that the downtrend is likely to continue. Traders enter short positions, expecting the price to fall further. However, the price unexpectedly reverses and rallies back up through the window. This indicates that the selling pressure that created the falling window has weakened. The downtrend may be coming to an end. Traders who shorted the stock at the falling window are now losing money. They may need to exit their positions to limit their losses. Section 7. Reasons for derailed window patterns. Several factors can cause a rising or falling window to be derailed. One common reason is a change in market sentiment. For example, if a rising window forms in an uptrend, but then news comes out that the company is facing unexpected challenges, the sentiment could shift from bullish to bearish. This could lead to a sell-off that derails the rising window pattern. Another reason for a derailed window could be a false breakout. A false breakout occurs when the price breaks out of a trading range but then quickly reverses direction. This can happen if the breakout is driven by low volume, or if it is triggered by stop-loss orders rather than genuine buying or selling pressure. Technical factors can also play a role in derailing window patterns. For example, if a rising window forms near a strong resistance level, the price may be unable to break through the resistance. This could lead to a reversal and a derailed window pattern. Similarly, if a falling window forms near a strong support level, the price may bounce off the support. This could also lead to a reversal and a derailed window pattern. Section 8. Implications of derailed windows for traders. Derailed windows have significant implications for traders, as they can signal a potential trend reversal or a weakening of the prevailing market sentiment. When a rising window is derailed, it suggests that the bullish momentum is fading and a potential downturn in price may occur. Traders who have entered long positions based on the rising window signal may want to reconsider their positions, potentially tightening their stop-loss orders or even exiting the trade to protect their capital. Similarly, a derailed falling window indicates that the bearish pressure is subsiding and a potential upward price correction is possible. Traders who have entered short positions based on the falling window signal may need to reassess their positions, considering whether to take profits, adjust their stop-loss orders, or even cover their short positions to mitigate potential losses. Essentially, derailed windows act as a cautionary signal, prompting traders to exercise greater prudence and carefully analyze the market context before making any trading decisions. Section 9. Confirmation signals and prudent trading. While rising and falling windows can be valuable trading tools, it's crucial for traders to remember that no pattern is foolproof. To make informed trading decisions, it's essential to look for confirmation signals from other technical indicators and market factors. Traders can look for several confirmation signals to validate the strength of a rising or falling window pattern. For instance, an increase in trading volume during the formation of a rising window reinforces the bullish sentiment and suggests a higher probability of the uptrend continuing. Conversely, a surge in volume during a falling window formation indicates strong selling pressure, supporting the bearish outlook. In addition to volume, traders can also consider using other technical indicators like moving averages, relative strength index, RSI, or MACD to confirm the trend direction. If these indicators align with the window pattern, it increases the likelihood of the pattern playing out as expected. Moreover, it's crucial to consider the overall market context and any fundamental factors that might influence the price movement. For instance, a positive earnings report or industry-specific news can strengthen the bullish case for a rising window, while negative news or economic data can support the bearish implications of a falling window. By combining the insights from window patterns with other technical indicators, volume analysis, and a thorough understanding of the market context, traders can make more informed decisions, manage their risks effectively, and improve their chances of success in the ever-changing financial markets.